Hello everyone, welcome. Before Dan and Tom get started, I just wanted to let you guys know about a great opportunity here for you. If you don't already have a TastyWorks account and you'd also be interested in getting some options education, I think this is a good deal for you guys. You can use this link right here, somurl.com/TW. This will allow you to sign up for a TastyWorks account, and as soon as you've funded your account, using our attached link here, using that promotional code Sheridan, we'll make sure to get you an on-demand class of your choice as a result of setting up and funding a TastyWorks account. So go ahead and check it out, somurl.com/TW. Any questions that you have for us, of course, give us a call here, 800-288-9341, or send us an email, info@sheridanmentoring.com or support@sheridanmentoring.com. Thanks.
Hello, Dan.
Hey, welcome, and how are you handling the first Arctic weather we're getting here in Chicago?
I've gone from my heated garage to my office today without stepping outside. I haven't felt it.
Not bad. I like that, Tom. I like that a lot. The only thing I had to do today to get cold was go out to I had to go outside to get I still get the paper Wall Street Journal every morning, and I walk out to get the paper. That was it.
You're old school, man. Paper Wall Street Journal outside.
I get it online, but there's something that still, I like the paper. I don't know.
Oh,
I still like every morning.
Totally agree.
The Chicago Sun-Times, I'll get the newspaper, read it, the sports, and then Wall Street paper, and, I feel a little bit normal doing that stuff. Well, we could get going here. I appreciate Tom coming. Just everybody, welcome to the session today, and glad to have Tom on here. And we're going to talk a little bit about the market, maybe go over a few trades, and we'll be on the TastyWorks platform. Excited for all of you to see it. Many of you have seen it before. And if you have any questions at all about the platform or anything as we're going through, I think Scott is already on here. Scott Sheridan, no relation, but I've got to know Scott during the years at the CBOE, and he'll be here to answer any questions that you guys would have. So glad to have Scott here and Tom. And let's jump in here. Tom, if you want to.
Dan, we have Scott on today over at TastyWorks. I'm in the Tasty Trade Studios. Scott and Chris Grace are on from TastyWorks. So the reason we do that is that those guys can answer any question. Nothing's off limits, and it gives me the ability to go back and forth with you and cover topics without even reading any questions or looking at any questions. So I won't see any of the questions coming in from any of the listeners, but from any of the participants. But Scott and Chris are the top of the food chain over there, so they can answer anything. And I don't think anything should be off limits today. So wherever you want to go, Dan,
Okay.
You and I have been doing stuff together like this for over a decade and a half now. So I'm comfortable with wherever you want to go.
All right, sounds good. Well, Tom, why don't you maybe go ahead as we maybe start out talking a little bit about the crazy 2017 and maybe what you're looking at in 2018, maybe the market. And that way, talking about it in the context of showing on the TastyWorks platform, people could get maybe a little comfortable with it. For those folk who haven't had an opportunity to see the platform, as we talk about the market a little bit, Tom could point out maybe a few things. So if that's okay, Tom, maybe we'll start with the macro. What in the world's happening here in the market, and then and kind of showing it on the platform.
Sure. I'd be happy to. And like you, Dan, and Dan, for those of you that are listening to Dan and myself for the first time listening to me with Dan, just so you know, we come from very similar backgrounds and have a similar history in the business together. So, and since we've both left the trading floor, we've been doing, we've been doing our own thing, but in a, with similar paths. So we've had a lot of discussions over the years. So our lives have been, they've paralleled in different ways, but we both started in the same place, and we're kind of, I wouldn't say finishing up in the same place, but we're in the same place now, which is nice.
Yeah.
So
yeah, it is.
So 2017 has been. I call this one of the the once in a decade type of year. I like to trade a certain way, and I'm not going to get into everything that I do in this because I don't think it's fair for. I don't want to contradict anything Dan's done, or I don't want to be different in that regard. But I think of years. I think of markets as being. I think the opportunity in markets is generally at some kind of an extreme, or what happens most of the time. I pretty much look at my entire trading career that way. What happens most of the time, because that's where I want to participate, in whatever is kind of normal market activity, normal cyclical market activity, and then where is there some kind of extreme that I may be able to get some kind of pot odds from, meaning that where's my 50-50 bet where my payout is 2 to 1 or 3 to 1, or where's my 25% bet for my payout is 6 to 1 or 8 to 1. So wherever the the payout's greater than the odds. And I think about markets like that, and it's worked pretty successfully for me for for a lot of decades. And sometimes you run into a crazy year, you run into a buzzsaw, and I think 2017 was one of those years. It was a year that we ticked up since last November, and we pretty much haven't had a downtick. And what's weird about it is that we haven't had any two-sided trade. And you have to go back, many, many years in history to find 11, 12, 13, or even 14 months without any kind of a two-sided trade. We've seen it before, but again, it's about as rare as a market crash or a flash crash or something like that, or we haven't seen it a lot of times over multiple decades. So that's been the challenge of 2017. The only time you get markets that are one directional, even if you started the year long, you'd be short. And if you started the year short, it's hard to get long. So it's an extremely, when markets go only in one direction, it puts a lot of stress on a lot of your types of strategies, especially for premium sellers like myself, because the other problem with bull markets is that you end up with not too much premium to sell. So one of the things that I think is interesting is looking forward, because I don't like to dwell on things that haven't worked, or because everybody listening today is I would say very clear of the concept. So I like to focus on things that are interesting and opportunities that we may be opportunities to look ahead to 2018. And I think that's going to be the biggest story. Anytime you get a year, Dan, like we had in 2017, where things were not normal. Volatility was extremely low. Volatility is at record lows right now. Anytime you get markets that have had, we haven't seen a market like this in 60 years as far as cyclicality goes. Anytime you see that kind of a market, you're probably near or close to a situation that will normalize. I'm not suggesting that it's going to mean the market's going to go straight the other direction. I'm just saying that I think you'll see more normal activity, which is more two-sided markets and more, more spikes in volatility. Well, if that's the case, a couple things to just discuss here, and if we have some time, I'll even just chat briefly, like even about Bitcoin and alternative markets and some of those strategies too, because I think it's important to know to see where people's focus is, but I don't think where their focus is necessarily where the opportunity is. And so, when I look at 2018, I think about a couple things. And I hope this is where you wanted me to go on the opening.
Oh, sure. Yeah.
When I look at 2018, Dan, I think of a couple things come to mind. Number one is that we've been in a period of extraordinary low volatility all year. So I do expect a lot more inconsistencies next year, and a lot more swings in volatility, and some sharp spikes in volatility. I do expect some more two-sided action. I do expect some higher volatility spikes with respect to what we call IV rank, which is measuring implied volatility against itself. So one of the first things on TastyWorks that's very neat, that's different than other platforms, I pulled up CMG just randomly because I have a small position in there. And when you type in any product on this platform, the first thing that pops up is the IV rank. Rather than the last price, we pop in IV rank to show you where the implied volatility of this underlying stands measured against itself. And the reason we do that is because for some people it would turn you off if it's too low, and for other people it will turn you off if it's too high. And something that is a little higher than average, 60 is a little higher than average, the average being about between 25 and 45. So 60 is, a nice little IV rank, which means it's an interesting play in Chipotle. And believe me, Chipotle is not that busy a stock. It has very limited liquidity, but it's okay for certain kinds of spreads. It's only traded 700,000 shares today. But I bring this up just to show you that on this platform, we default to IV rank. Now, if I was to look at a stock like Apple, for instance, and just click on the offer price here, the neat thing about the TastyWorks platform is as soon as you click on any stock that's in your watch list, and your watch lists are all configurable, it immediately populates the Apple quote at the top of the page. It populates a daily Apple chart up here, and it gives you your different positions that you may have on, and there may be a bunch of positions or not a bunch of positions, for example, in Apple. So, and then it populates an order screen if you want to route an order. But the neat thing about this is that you get to see, okay, well, the IB rank in Apple is only 27.8. So if you were looking at something like a premium selling opportunity, you might look at Apple and go, that one's not as interesting as maybe Microsoft at 36 or Amazon, for example, at 46. So what I just showed you is 3 stocks, and you can look at all 3 of those stocks one after the other, and you can say, hey, those are 3 really liquid stocks, Apple, Amazon, and Microsoft, and they're 26, 36, and 46 in an IB rank. So as you get higher, they become more interesting. So if you're thinking of a trade like, let's say, an iron condor or a credit spread, you'd probably rather do Amazon based on IB rank, or you'd rather do Chipotle, which is even higher than all of these, at 60. And that's one of the neat things about the platform is we try to differentiate underlyings by implied volatility rank. And I think some of the key takeaways or some of the things that we're going to be looking forward to in 2018 will be opportunities in volatility. But when we bury it down, when we kind of grind it down even further than that, I think some of the opportunities that we're going to look for in 2018 will also be indexes, Dan, indexes or stocks that were crazy this year. For example, products like, stocks that had moves of over 100% like Boeing, or stocks that had extraordinary moves like Caterpillar or Deere, or a bunch of Dow stocks like UNH and things like that. I mean, I think you have to look at these stocks and think, hey, you know what? Even though price is not mean reverting and volatility is mean reverting, maybe in 2018, there's going to be some opportunities there for some two-sided tape action.
Right.
Now, when I think about 2018, I think a couple things, and I'll give you my overriding big picture, and then Dan, we can kind of dig down into some specific strategies. My overriding picture for 2018 is that after the year we've had this year with virtually no pullbacks, there's going to be some decent pot odds. Anytime you have extremely low volatility and extremely high price, and I'll show you this real quickly by just looking at something. For example, I'm going to look at the Nasdaq Futures, which are down today but have had a huge move. When I look at the Nasdaq Futures, and here's a quick graph of them, I look at a product that has had, again, an extraordinary move this year. This is just from September to where we are now, but you can imagine that we've gone, this move this year has been insane. Let me see if I go back a little. Oops. Let me go back to the weeklies here. So what we've seen this year is been just a crazy kind of move for over the course of the year. Let me go back even a little bit more to monthlies. And the neat thing about this, let me do this for a second. Hold on, Dan. I'm sorry. Apologize.
Yeah, sure.
Don't usually use this charting package. Hang on. There. What we've seen here is these extraordinary moves to the upside, and when we see that kind of thing, what makes me nervous is just that when I look forward to next year, I think there's going to be some interesting opportunity for a market that may deliver a lot more two-sided action, and that means the velocity of the down moves may be really interesting. And that's one thing I look at. Another thing that I've looked at, and another thing that I've been talking about a lot is, the bond market and the commodity markets. And what I plan to show you this morning, and let me take you back here for a quick second. What I plan to show you this morning on this watch list is if you take a look through my watch list, which is not different from, I guess, from most of the people listening today, I have the 4 indexes that lead off my watch list, which I look at the most: S&P's, Nasdaq, the Dow, and the Russell. Then I look at the VIX just to see what the VIX futures are doing. I don't really look at the VIX cash, VIX. I look at /VX. And then I look at things like crude oil, which has been strong. But then you've got bonds, which have been sideways all year and have done absolutely nothing. So I expect to see some pretty decent movement next year in bonds. And I'm looking for the bonds, which is /ZB, to go down more than /ZN, which is the 10 years. And essentially, that's what we call the knob spread, notes over bonds, and that's the yield curve. And the yield curve is riding just over historical lows right now. So I believe you're going to see a pretty decent-sized opportunity in betting on the yield curve to widen out a little bit. That's betting that long-term bonds will go down and rates will go up higher than short-term bonds. I think they'll both go lower, but the long-term bonds, which is the 20 and 30 years, will go down more than the 5 and 10 years. Then we look at corn, which is, I'm sorry, not corn, this is the Canadian dollar, the euro, the Japanese yen, the Aussie dollar, the Mexican peso, and they've all been strong this year against the US dollar, which has been really weak. And at the beginning of this year, everybody was calling for the exact opposite. So I think you're going to see really decent volatility opportunities in all the currencies, which may normalize price-wise next year. The next one is gold and silver. Gold is making not new lows for the year, but gold is making new lows for its, the last part of its move. And so, meaning the last couple of months. And silver is making new lows for the last couple of months too. So both of these have been hit hard. And whether or not that's in reference to Bitcoin, I'm not sure. But gold and silver are cheap. This is wheat, corn, and soybeans. Soybeans, wheat, and corn. All 3 of those softs are on their low. Natural gas on its low as well. And then, of course, Bitcoin, which we're just looking at right now, which seems to be interesting but not really tradable from a retail perspective. So when I look at the commodity markets, Dan, I think about just incredible potential opportunity next year based on they haven't gone anywhere this year. There's been an asset bubble in stocks. There's been no asset bubble in commodities. There's been basically no money moving into any kind of inflation hedges. You still have bonds trading just over all-time lows, rates trading at all-time lows, bonds trading near all-time highs. You have the yield curve at all-time lows, and you have stock prices which have almost no risk premium into it. I think that makes for a very combustible, yet a very interesting 2018. I've even said that I think 2018 might be the most opportunistic year of this decade.
Yeah, I think, Tom, you're 100% right. When I don't know if we'd call 2017 like an outlier, but it was definitely quite an unusual year in terms of, what would be the probabilities of this type of activity happening again in 2018. I would say pretty low. And that's why, I get excited when you're talking about the potential for 2018 with a lot of these products, because we don't expect it. Like you said, when you look at 2017, I was just looking at this, Tom, before I started here. If you just look at the beginning of the year through September 1st, almost the first 9 months of the year, we went from 2257 up to 2476, up about 220 points. And then the last 3 months we've had, we've gone up almost as much in the last 3 months as we did the first 8 or 9 months. But the point is, we're getting no downside. We're getting no speed to the downside. It's just this continual up. And, no one thought it could last this long, which it has, but we've just continued. And, even in the last 3 weeks, it's like insult to injury, right? We've gone up about 65 points in the last 3 weeks, and a standard deviation for that same period of time might be 45 points. And so it's just, and I think the other thing, Tom, as you pointed out, since mid-July, the VIX has been under 10 an awful lot. And I mean, it's almost like the nail in the coffin. And so I think for a lot of the premium selling strategies, especially from the short Vegas side, which maybe we'll get into, it's been a struggle for some of those numbers. And I know we've had to adjust and tweak some of the strategies that we've been doing. I've done some shorter duration. If you said, what are we kind of doing now? We're kind of doing a little more shorter duration and a little more into the kind of iron condor alternatives, like maybe a double calendar and stuff like that, a little shorter term, and just trying to be adaptable to what's going on here, and agreeing that it's been very unusual. But Tom, go ahead. That was a good overview of the different products on your watch list. I like that because a lot of times I don't look macro enough, and I like how you kind of put it all together like that. I think that's important.
Well, you brought up some interesting points about volatility. In fact, in 2017, we had we spent the most time of volatility below its mean in the history of tracking volatility, which I think goes back into, I think it goes back into around the mid 80s for actually tracking volatility. So when we look at it, it was the least volatile year we've experienced. But if you take this year, 2018, and combine it with 2017, 2016, and 2015, those would be the three slowest years volatility-wise and the least amount of, we call it kind of market cyclicality or two-sided market action that we've seen in the last 65 years. So if you're kind of a dogs of the Dow type of, if you have a dogs of the Dow type of mentality, or you're contrarian by nature, this would be if you're able to take something out of, kind of look at it as from an historical perspective and just say to yourself, has fear changed? Are we now just immune to fear? If you're any kind of a contrarian, you kind of have to look at this take a step back, look at it from a macro side and just from more of a realist. Forget about macro. Just take a step back, look at it as a realist and say, hey, you know what? Is this really as interesting a time or potentially an opportunity as I think it is? And if that's the case, you have incredible liquidity, and you have really rich prices, and you have very low volatility, and you also have big investments, meaning that people are all in right now. The street is all in. Passive investing is full steam ahead. Index funds have been killing it this year, and so. And if you've killed it this year, there's no way that you can get out of the market no matter what you think is going to happen, because the reason you killed it is because you're in the market for the last 3 years.
That's right.
So we look at this as, I look at this actually as just thinking about, again, 2018 as having extraordinary opportunity based on price extreme and based on volatility reverting to the mean. I don't know about price necessarily, because I don't think price is it's not mathematically mean reverting, but I think that there's a certain characteristic to the way we think that makes us want to believe that price is, at least to a certain extent, mean reverting. But if volatility is mean reverting, price will follow if there's any kind of a down move. So what's interesting to me is that we've kind of lulled everybody to sleep in 2015, 16, and 17, with 2017 kind of being, you mentioned outlier. I think 2017 is a huge outlier when we look at in all the years we've been trading, we look at the markets from, give it any kind of historical perspective. But we've learned a lot this year. Like you said, we've learned how to adjust strategies to get more horizontal, which is a low volatility strategy. You talked about calendars and double calendars. Those are a low vol strategy that, work best when volatility is, on its lows. We've also learned that your odds don't go down when you do an iron condor when volatility is cheap. The odds don't get worse. What happens is the payouts get worse. So it's like the hot odds get worse. You take the same amount of risk or more for making less money, but your statistical chance of success doesn't go down.
That's right. Yeah.
So we've got to experiment with a lot of things, Dan, in 2017 that we never would have looked at before. Like, for example, I'll give you, let me go to like a low volatility underlying. This is TLT, and it's one of the lowest IV ranks out there right now. It has a 1.2 IV rank, which means measured against itself, it can't get any the volatility in there can't go any lower measured against itself. So if you were looking at a trade, to potentially do in, let me just lower the number of strikes here. So if you were looking at a trade to potentially do in TLT, you might choose, and let me actually lower the strikes even more here, just fewer strikes so we can accomplish more. You might choose some kind of a counter spread like Dan just talked about, or some kind of a double counter spread. You're talking about extremely low implied volatility. You're talking about an expected move over the till January expiration of only $2.40. You're talking about $125 stock. You may want to do a put calendar below and a call calendar above, for example, because this is a perfect environment from it. And then you'd be buying the 124 in February, and let's just say you're buying in, I'll just go out to the 126 in March. And this would be an example of kind of a little bit of a funky, let me close up a couple of these strikes here. Maybe I can do it down to 6 strikes and fit this all in here. No, I can't fit it all on one page. Let me see. Oh. Yeah, I can. Perfect. So this is like a funky double calendar. And the neat thing about TastyWorks is you can mess around with all this stuff, which is really cool. So for example, I'm selling front month 124 puts and 126 calls. Just to, oh, I'm sorry, I was off by my eyes, I'm blind here. I'm going to sell the 127 calls. So I'm going to sell the 124 calls and 124 puts and the 127 calls. I'll even, let me make this a little better. 125 puts, 127 calls, and I'm going to buy the one. Move it.
Yeah, I like
you can just drag all of these.
Yeah.
Yeah. So one of the neat things about TastyWorks, and this was Woody's design. Just so you know, this is the same development team that built Thinkorswim 17 years ago, and this is the same team that designed Thinkorswim 17 years ago. This is just their vision in 2017. And so what I did here is I clicked on the bid of the one, I just read the price wrong before. I clicked on the bid of the 125 puts in January. I clicked on the bid of the 127 calls in January. They're both $1 out of the money. And then I'm going to buy the 125 puts to have a 1-month calendar spread, and I'm going to buy the 127 calls to have a 2-month wide calendar spread. And these are non-diagonals, all horizontal, straight calendar or time spreads. But one of the neat things about this platform is, let's say you had a little bit of a bearish, you were bearish a little bit on bonds. So one of the neat things here is instead of buying the 127 calls in March, I could buy the 128 calls and just drag it one strike. Or instead of, I'm a little bit more bearish, so instead of buying the 125 puts in February and volatility so low, I can make it into a diagonal and buy the 126 puts. The platform is indifferent to what strike you use and to what quantity you use. So the beautiful thing about TastyWorks is it doesn't have to be, you don't have to have a predetermined quantity or strike to use. You can make it any strike, any quantity, and use any month that you want and route it as a single order. And that's kind of neat. And if I decided,
you know what? That, will it show you the, like, is you're kind of moving the long strikes around there, and like you said, you can pick, you want to make it a little bullish, you can move this strike or bearish. Does it show you as you're moving it? Oh, it shows you on the bottom how the deltas or the Greeks are changing a little bit. Oh, yeah.
It shows you all the Greeks right here. It shows you, it won't analyze your, in this particular case, since it's not actually defined, it can't do your probability of profit, but it will show you what your deltas are and what your theta is, and it'll give you as many, it'll show you how much extrinsic you're buying and whatever else it is.
I like that. Yeah, so as you're changing it, you could kind of tweak it until you get the right Greeks you want or anything else.
Absolutely. And in fact, you can go even month to month. Like I can take this February position, like I said, and move it over to, I can take this February position and move it over to March. I can take this March position and move it back to February. I can take the 126 puts and move them to the 125 puts. I can turn the front month from a strangle that I'm selling into a straddle and then buy the back month wings. And so it doesn't matter to us. And then you can change the quantity on each line by just highlighting, and then by highlighting any line, you can then just change the quantity if you choose. So it's a very simple platform in in that regard. Now, if you wanted to take a look at this then, and you can also look at it, Dan, in a curve mode, and so you can take a look at it and just say, hey, okay, well, this is a way I can look at it, and I can kind of see it in graphical format. So if I wanted to, we call this a table mode. And the neat thing about a table mode is that it looks like most other platforms, and it gives you a sense of, oh, okay, I get this. It's a pretty easy platform to use. But we also offer it in a curve mode, so you can see it, if you want to visualize it, inside of a distribution curve. And of course, you can do the same thing in here, which is super neat, which is if you wanted to change your buy side, you can drag the calls from 127 to 128 and the puts from 125 to 124, and you can move these strikes, and if you wanted to do the 126 straddle, you can just, overlay them. It's a really
even within the curve mode, yeah.
It's a really neat piece of technology in that regard. And then if you go back to the table mode, it's exactly how you just changed it on the curve mode. And then the simplest part about this, you just decide, if you want to route this, it all pops in down below. You see your net credit or net debit. You just hit review and send the order, and that's it. You're done. It's a
I like
very
that because you
simple.
can kind of do your as you're thinking out loud. You can just move things around until you get kind of the picture and like you like it, and then just preview it and send them.
So the example here was I used TLT because it has an extremely low IV rank, so it's perfect for example, it's perfect for a trade like a calendar spread or something like that. But if I went to my watch list and I wanted to see, for example, what are some of the lowest IV rank, you see TLT is the top one. But then if I go through this and I'm looking, what else has a really low IV rank, I can just see real quickly by sorting, okay, well, FXE is liquid, GDXJ is liquid, Caterpillar is liquid, Spiders, GDX, WIN's liquid, all of these really low volatility rank underlyings are perfect for calendar spreads. But then if I wanted to flip the cards over and say, hey, what's interesting potentially to the, for a position where IV rank is really high, maybe I say, okay, well, I'm going to go to Target. It has an 81% IV rank. So I will click in Target in here, go back to the trade page, and then say, you know what, in Target, with 38 days to go to January expiration with an IV rank of 81, maybe stock right now is at 61. Maybe I want to sell, let's just say, the 60, 57.5 put spread, and I'll go 10 points above. Well, I can't really go. I'm sorry, not 60. I did that wrong. I'm sorry. Let me do this. Maybe I want to sell the 57.5, 55 put spread, and maybe I want to sell the 65, 67.5 call spread. And here's a $2.50 wide iron condor for 98 cents, which is 40% of the width of the strikes, which means it has a 60% probability of success with an 81% IV rank. So the neat thing about this platform is, from a simple watch list, and again, it was designed, Woody and his team designed this so none of the other components, the columns on the left and the columns on the right, don't change at all. So they stay static. So you don't have to go searching for where you left your last page or anything like that. I go back to the watch list. I looked at stocks that had high IV rank. I sorted by IV rank in here, and I found one in Target with an 81.5%.
Yeah.
I just clicked on TGT. I went back to my trade interface. I set up this iron condor because it had high IV rank, and now I can look to see if I want to do it as a 2.5 point wide or widen it out more and do it as a 5 point wide, taking in $1.47, or do it as a 7.5 point wide, and that being a synthetic strangle for $1.73. So at $1.73, it's a synthetic strangle. At 98 cents, it's a tight iron condor. At a tight iron condor, I have a 52, well, it's actually closer to, it's higher than this, but that's because the quotes are a little wider at the end of the day. But the probability of profit of making 1 penny, we showed 52%. It's actually a little higher than that. The amount of extrinsic, we call this P50. That's the chance of making at least 1 penny at some point during the, or getting to your 50% profit target at some point. This is just off because we're closed right now, and so all the prices aren't coming through exactly right. But the delta is for each 5 lot here is only 6 negative deltas. the amount of theta per day, the maximum profit, and the maximum loss all built into this line. And then again, if you decide you wanted to skew a little bit and make the position a little bit short, you roll down the call side. If you decide you wanted to make the position a little bit short, you can move the put side away. If you decide you want to turn this into a synthetic strangle, like I said, you move the calls $7.50 away, and then they don't give you any protection, but they give you capital efficiency.
I see. Okay.
And that is a very neat way for individuals to look at potentially, what they want to trade, or what they can trade. And then the nice thing about this platform too is I don't know if I've told you this, Dan, but it's built on high-frequency middleware. It's the only platform of its kind. So it's 20-something milliseconds to the marketplace. There's no other platform that's anywhere close to this fast. So you hit review and send. Your order pops into this column over here. This column here is also configurable. It'll show you if you have any existing target positions. I think I have something small on in here. Yeah, I have a couple little small target positions on in there. And then if you want to cancel or adjust this, you just right-click. You can replace order, cancel order, or create similar order. So in this case, let's say I wanted to replace the order by, instead of trying to get 173 credit, I want to go down to 171. I just double-click on that, changes the price to 171. You get your message. And if I wanted to cancel, I hit cancel, and I'm out. I don't think anybody listening today, unless they're on TastyWorks, has ever experienced a platform this fast, because it's not bloated. It's extremely light. The technology's really improved over the last 20 years. We built TOS. We had a lot of stability problems at first, and then we built an amazing platform after that. And Woody and his team did an incredible job. Well, today, that same team has built another amazing platform, but this time it's a lot faster and it's a lot more direct. And we cut out all the stuff we don't think you need. We made it really simple. So what I gave you was an example in TLT of really low IV rank for calendar spreads, and an example in TGT, which is two completely different stocks, 20 and 30-year bonds as opposed to target the market. And if you wanted to look at something like just a two-legged strangle, for example, selling the call nearest out of the money call, nearest out of the money put, the platform TastyWorks is indifferent to whatever you want to do. And if, for example, if you want to sell an equal number, a 5 lot of puts and a 5 lot of calls here, that's fine. But if you decide, okay, well, I'm a little bit bearish, so you double click on that on your call side and you change your quantity. So now I'm selling 5 puts and 7 calls, and you write it as a single order. So everything is super simple. Or again, if you wanted to sell the 60 puts and the 65 calls, but sell more of the 65 calls, you can do it that way. And so we made it
Tom,
so every part of it's configurable.
Yeah, I like the fact that you can do everything from this page. Like on the right, you were showing if you want to, it'll show you if you have what orders you have in target, and then you can change them right from there. You're not You're not really switching from different tabs necessarily, are you? I mean,
no, that was Woody's biggest problem with what we designed before, and that's what he wanted to change this time. If you look at this, I went to the curve mode in Target just for a quick second, and wherever you see red, that's where you lose. Where you see green, that's where you make money. And some people that are visual may decide, okay, well, this is what I want to see, Oops, let me go this way for a second. This is a better view for me to see something in a more graphical sense and move things around here. Okay, well, this one, I want a bigger win rate, so I want a bigger win space, so I'll move this out. Now I have a bigger green space, but obviously I'm going to collect a little bit less of a credit. And you have to decide whether or not you want to collect a bigger credit or have a bigger win space. I mean, it's pretty simple. That's the basic concepts behind risk and reward.
That's neat. Yeah.
It's very slick. I mean, there's also an active trading page. I won't get into that. That's for futures and for scalping. We can do that at another time. But I just wanted to stay real simple on the curve mode and the table mode. I mean, this is what trading is all about. I mean, I know we're mesmerized by things like Bitcoin. Here's a Bitcoin quote, by the way. So like, this trade, but it's not feasible, and people aren't trading, individual investors are not trading Bitcoin black and white, because there's nothing to spread off against it. There's no strategy there. It's just a bet whether it goes higher or lower. That's not trading, that's speculating, which is fine. But it's a speculation asset, it's nothing else. I love the engagement that it's given to a lot of people, but it's not that interesting to me, from a trading standpoint.
What's the latest, Tom? Is the SIBO like one of the first ones involved in this? Is that what I'm hearing? Or
the SIBO was the first to launch. They launched it on Monday. There's only one brokerage firm I know that's supporting it right now, and it only traded like 1,000 contracts today, so it was not that busy. But that brokerage firm is only supporting buy only. We will be offering the Bitcoin futures at the CME next week, but their problem is that the contract is extremely big. Right now it's 5 Bitcoins. When they did it, Bitcoin was about $3,000. Now Bitcoin is $18,000. So you're talking about, 5 times 18,000 is a $90,000 notional, of which the margin is going to be over $50,000 for that. So it's going to be really
that's a big
very, very cost prohibitive for most retail investors to spend $50,000 to trade one Bitcoin contract. It doesn't make a lot of sense.
Okay. But you guys you'll be supporting the CME product, which comes out next week. Is that right?
We will. As of either Monday or Tuesday, we'll be supporting. We want to make sure that everything clears correctly. I don't think a lot of people will trade it, but we will be supporting it. I think we're going to be supporting it more out of just because of all the interest and people like watching it. And I think that's kind of important. I mean, sometimes there's games you don't want to bet on, but you just kind of want to watch the score.
Right.
And I think, I think that's a little bit of what Bitcoin's about. I think it's kind of like a game where you almost want to watch the score, but most people that know what they're doing don't want to trade it because it's just a crapshoot. And, like the markets right now, tonight, are pretty tight. They're only $30 wide. But when you think about $30 wide with only being on one side of the market, and the markets are one up, it's a tough trade.
Right. You'd be nervous. But it's one of those markets, Tom, can't you? I know my son a couple months ago went in and just put $100 in to get engaged in the market. And he said, Dad, it's up to, my $100 is up to $230. And but, like you're saying, he was engaged and watching it. And it's just definitely getting a lot of people interested. Hope they make the next step and get over into maybe some options and stuff. I don't know if they will, but it's good for the engagement process, isn't it?
I couldn't agree with you more. 12 million people open Coinbase accounts according to Coinbase, and we couldn't get 12 million people to open brokerage accounts if we gave away lottery tickets. So the fact that all these people are engaged is freaking awesome. The bad part about it is, of the 12 million people, 11,900,000 have no idea what they're engaged in. I think the good part is it means there's an appetite for trading, which is good for everybody listening, because what ultimately happens is, in order for the quality of the content that you receive, the quality of the technology that you get to use, and the quality of the markets that you get to trade on, you want more participants. The more participants, the tighter the markets. It's that simple. And the better the technology.
That's right. Yeah. No, it's exciting to see, and I appreciate and agree on your optimistic outlook for 2018. I think after what has happened this year. But the other thing, Tom, I was thinking about is, when you have adversity, like in 2017, adversity meaning just a different type market than you're used to, it does cause you to try to look a little harder, right, for opportunities, look a little harder to maybe how do you tweak things versus, like you said, when the market's moving both ways and volatility's moving, it's a little more natural of a process. And this year, I know, has caused me in particular to look at things a little bit differently because it was such an unusual market. So I think that can be a positive with people also. And so, yeah, well, Tom, I appreciate
Hey, Dan, I couldn't agree with you more about that. I actually think 2018, and I said it earlier, is going to be one of the most opportunistic years of the decade because the last 3 years, I believe that, and most of the people that are listening today, I think that, and I say this because I know because I do your live show, you know, in the summer when you do the event in the Bleacher Center, which I love to do.
Glad to have you.
I think I've done that for the last, I don't know, 5 or 6 or 7 years or something.
Oh yeah, every year we do.
So I know so many of the people that are on today, and I think one of the neat things is you have a very advanced, I believe that people that are at the level of the people that listen to you and trade along with you and you know, that are involved in this discussion today are at a completely different level, and they can appreciate, you know, that 2017 was very much an outlier year, and that usually that's followed up with something that's very opportunistic because it kind of tests your mettle, it tests your, you know, it tests your staying power. And I think that, you know, whether it's the yield curve, whether it's price extreme, whether it's volatility-based opportunities, I think there's going to be 10 or so major trades of 2018 that are going to be kind of almost like comeback trades. You know, opportunity that wasn't there this year that shows up next year, and I think that this group will be most ready to take it, you know, to take advantage of that, and that's the cool thing. I mean, we built up a lot of expertise over the last 5 years. You know, it took us a long time to build the technology to support all these ideas and all these strategies, and it took a long time for you and me and everybody else to come up with really to structure the content so that there was a set of mechanics that people could, you know, could work with. And now we're getting to the point where we need to be able to implement that. You need some two-sided trade to do it, and I think you're going to get it.
Right. Yeah. Well, good, Tom. I appreciate so much you coming on, and hopefully, folks, I would love to maybe towards the end of January, if Tom gets a chance to, we can come back, and hopefully we have a few more different things to maybe discuss and go over as we get into the first first month of 2018. So again, thanks to Tom and Scott and Chris for coming in here and sharing some of the neat technology. And I really like that page where you were changing when we were going over TLT specifically with the double calendars and all that. And that was neat. So look forward to some of the new innovations with the software. Look forward to talking some more on some of the exciting opportunities in 2018, Tom. And thanks again for coming in here.
Dan, you're the best, man. Thanks so much for giving me the opportunity, and thanks Scott and Chris for doing whatever, you know, answering all the questions. And hopefully we'll catch up with you as soon as possible.
All right, appreciate it. And thanks again. Thanks, Tom.